Ladies and gentlemen, this is where the bulls cry. Did you get that joke? And this is where the bears get overly confident. You're watching the Stock Market Brief. I'm going to be going over some key levels today and some big names because I do not want the bulls or the bears to get caught off guard coming into tomorrow's report. Now, as we already know, the Fed, they rose up their little rate hikes, right? Up 75 basis points, and he became very hawkish, and that sent the markets down, right? Today, Google was down on the likes of 4%, Amazon was down 3%, Microsoft down 3%, Apple down 4.5% almost. And if you even look at week-to-date performance, look at Amazon, it's down around 20%. Meta's down like 10% or even more, something like that. Google's down 10%, Apple's down 4%, Microsoft is down 5%. Holy moly, call your broker. Cue the flaming Elmo over here. We got big data dropping tomorrow that can also shake the markets up, and everyone's talking about good news is bad news and potentially bad news is good news. So if it comes in lower than expected, hey, we might have a case for a stock market rally. Now, I want to go over something more specific than just narratives. If we take a look over here at the zones, this is something that I share with my Patreon group, but I'm just going to get right into it. First and foremost, take a look at the dollar. The dollar upside potential. Now, I know you don't understand what this math is. This math was originally designed by Joe, I forget his last name, Catanza or something like that. And basically what we're doing is we're taking what's called, it's from the book, The Misbehavior of Markets, Benoit Mandelbrot. So if you want to read that book, read that book. But he integrates that math, fractal math, into the Bollinger Bands and the Hearst component. And it gives us a good idea as far as risk management goes. And it gives us these levels to really determine, hey, is it the best time to be going short here, best time to be going buying? It's all about risk management. It doesn't mean that these levels are probable to come, but it is something to be aware of. And I'm just pointing out some key assets and where they stand within these zones, okay? So where are we? So the dollar right here, that's the Dixie. The dollar upside is 0.5% to about 3% downside. What does that mean? Well, there's a tight correlation between the dollar and various other assets. When the dollar spikes up higher, typically we see a negative correlation to the S&P 500. That's what we've been seeing. So if this goes down tomorrow or stronger, right, what could potentially happen to the other assets? They might potentially bounce. And let's look at those other levels. First and foremost, let's look at gold. Gold has about a 0.8% downside, a 1% downside, to about a 2% upside, okay? So it's interesting to see as dollar's at the higher end of the zone, gold's towards the lower end of the zone, and you would think that, hey, if the dollar comes off, gold might lift up, okay? That makes sense, right? If you take a look at the Qs, we talked about this one yesterday, we have about a 0.5% to the downside, and then we have 10% upside. So we're talking a huge, huge move right there, way there at the bottom. And then if you take a look at a couple other big, obviously, sectors that are in the S&P 500, XLY, you're looking at, and which we talked about yesterday, 9% upside to about just less than 0.5% downside. And then XLK, about a 1.5% downside to 11% upside. Now, this doesn't mean that it's going to go up 11%. Remember, the market's bearish, okay? The market is completely bearish right now, but it is an idea, it is an area to not become overconfident like this bear, right? This is where bears are very tactical. They take profits, they wait for the market to bounce, and they look to reapply positions. They're constantly moving their inventory around, and they don't get hung up on any one position. If they're in the green, they pull some profits off, right? It doesn't mean you have to get out of all your profits, but it means you take some, okay? This is all about being tactical in a bear market. Now, one other thing that I noted out to the Patreon group today, and I'm sharing with you guys for today's episode, is that the high market cap stocks are near the lower levels. Ignore the S&P 100 doc. I give out the zones for the entire S&P 100. Apple, Microsoft, Google, and Amazon, they're all towards their lower end of the zone. So I wanted to bring those charts up, but before we do, I just want to show the dollar also. The dollar is at its actually upper weekly expected move. Now, the reason why I wanted to point this out before going into those charts is because right here, last week, that was the low end of the dollar weekly expected move. Right over here was the week, a couple weeks prior. And both of those times I pointed out to the Patreon group and saying, hey, it's somewhat of an important level. We might as well be aware of it because if this does start bouncing from this level or remains flat, it could bring pressure to the S&P 500. And then from that area, we saw the dollar actually move higher. We saw the dollar move higher. Now we're at the upper end. So now I just want to call out, hey, if this starts taking a little bit of a breather, not to say it will, right? We got some really hawkish comments and the market might need to catch up, right? It could very well head higher. Look at this MACD, it's crossing over. Look at the relative strength, it's strong. Look at the dollar on this move, or the volume on this move. So, and the trend on top of all of that. But it is something to still be aware of, okay? And I hope I'm getting that point across. There's no certainties in the market, but we have to deal within probabilities and manage around that as best as we can. Now, if we take a look at Apple, Apple got completely crushed. So if you took some shorts up here and the market came all the way down to here, some people might say, well, actually, I plan it going lower, like it's going to go lower. And I'm with you on that. I think it can come retest these lows at some point. However, you got to understand from a risk management standpoint, if you are this much in the green, right? So if you took a short from up here and you're this much in the green and you're not taking any profits into, prior areas of contention, which acted as support, what exactly is your plan? You got to always consider updating and managing your risk. Okay, so that is kind of what I'm looking at. Very strong move to the downside in just 3 trading days, and we're at the lower end of all of these zones here. Take a look at Microsoft. Microsoft has been putting in lower highs and lower lows. It's bearish, right? But it's in a channel. And as you can see, as we come into these lower ranges, we've actually bounced from those levels, and we're coming right back into striking distance again. That does not mean that we can't crash right through it. It's always a possibility. But remember, if we get very extended to the downside, we're likely to see bounces. Why do I think that? Well, because we've seen it every single time this year. We've seen moves to the downside. We saw bounces. Downside, bounce, 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 right? Bounce. Are we going to see another bounce? I don't know how strong it's going to be or what the case is going to be, but as we're seeing now, the trend is down, but we're coming into these lower levels, okay? So that is something to be aware of. If you take a look at Amazon, same situation, right? We have, a trend line tag here, we have a trend line tag here, trend line tag here, and now we're coming right down to it after a very strong move to the downside. When we had a very strong move to the downside over here, boom, we bounced, right? If we had a strong move to the downside over here, will we bounce a little bit? It's always a possibility, but remember, sometimes in bear markets, these bounces, they become less and less. We've already seen monster rip your face off moves, so is it, if we get a bounce, how high can it bounce? I don't know. And will you play the bounce? I don't know. That's up to you if you want to try to catch a falling knife or you want to try to average into it, whatever the case is, right? People are saying this is a 52-week low. No, this is a multi-year low, okay? Absolutely crazy there in Amazon. Now, if we take a look at Google, here's a great example of it breaking down through the channel, right? We had just one tag here, we had one tag here, we had tag, 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 and then you can see now Google is just getting completely and utterly obliterated, coming into a prior area of contention over here where we saw some trade chop. So is Google going to continue to cut through like butter? Because from my perspective, what I'm seeing out there is a lot of people are very, very bearish, and typically at these times, you want to consider covering. Going long right now is like catching a falling knife. So if you do that, you got to be very tactical and look at other time frame charts, but just be aware where we stand in the overall context, right? You don't short in the hole. If you short in the hole, the risk management perspective is not good. Can you get lucky? Absolutely. But let me tell you the wrong thing about that. If you build in wrong practices and you shorten to the hole right here, there's going to come a time where you get your face completely and utterly ripped off. That is just going to be the case. So if you get lucky, this is the worst case scenario. You shorted right here, you short right here, and it goes down further and you're like, oh, see, I knew it. I knew it was going to go down. Okay, cool. Keep doing that strategy and then tell me in 2 years what your portfolio looks like, okay? Now, if we take a look at Google from a more backed up perspective on a weekly time frame, I was looking at this bear flag way back when, actually right here on August 30th, I was looking at this bear flag. And we broke down, right? Now we reached the channels measured move, and we still have a full flag measured move into the 70s. That's absolutely bonkers. So, back here when I was saying, I was like, I find it very, very hard to believe that it'll do this. But I said the trend is down, and the trend, weak stocks get weaker, strong stocks get stronger. So we got some continuation. Now, is this out of the picture, 75.70? I don't think so. I don't think, maybe can it be a strong move? Well, I don't know, right? We have a binary risk event coming out tomorrow, and if it's way better than expected and the market's like, Fed's gonna full pedal to the floor, full throttle to the floor, whatever the heck this saying is, yeah, it can continue to get crushed, okay, and bring in more fear and more panic and whatever the case may be, okay. But it also potentially presents itself for a potential bounce area, right? I don't short here for the likelihood of getting potentially here if I can get my face ripped off right over here. Okay, so I hope that makes sense. Overall perspective, if we look at the daily time frame, we had a new closing low for the Qs. I'm surprising that nobody has actually mentioned that yet. We had a new yearly closing low, right, for the Qs, right? It's lower than this low, and we didn't close here, right? This was the CPI day. We moved up. There's those anchored VWAPs from this month, from last month, and you can see we're far off of those. So even if we get some sort of a bounce, which would be crazy up into this area, we still have these coming down over us, which would act potentially as a level of resistance. So we'd have to watch out for that, okay? Okay, now another thing I want to call out from a couple indicators perspective, this is growth versus value. Every time that we see the rate of change cross down from positive down through zero, we've seen some weakness, and I highlighted those on the screen. What I haven't really highlighted is the overextended to the upside, overextended to the downside levels. And the reason why I'm highlighting it now is because we have a rate of change. Clearly, it's moving into strong negative territory, which would be considered overextended to the downside. So what happens when we get into these areas down here, right? Boom, boom, and right here, boom. Well, we've actually seen sometimes rallies come out of it, right? Sometimes rally, oh, even right here, boom, rallies come out of it. So it doesn't mean it's the probable outcome. Right here, we saw, little rally. Right here, we saw, it was a strong move down, little rally, but then we had continuation to the downside. Okay, so we can see something similar. Who knows? But I just wanted to call that out. Okay, that the move is getting pretty frothy right now. Okay, and if we take a look at the BP chart for technology, look at how fast that came outside of the overextended territory. We talked about it when it was overextended. We said, be careful. Some people were like, it's not going to matter, blah, 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 blah. And then 2 days pass, and then all of a sudden we see this massive drop. Okay. Now BPNDX, also we got into that overbought territory. We talked about it, and then we got that massive drop. It's no longer in that overextended territory. Last thing I want to call out over here before we get into the 15-minute charts is we talked about back month versus front month volatility. I know volatility has been acting a little weird. It's been coming off, and people are like, what's going on with this correlation? Blah, 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 blah. Well, let me tell you this. I mean, correlations, they do break, and then they come back, okay? So it happens. I showed a chart on Twitter that explains that, or that shows that. Not a narrative, it's actual data. You get to see the correlation move. But what I like to look here is front month ratio. So it's basically back month versus front month. And we're looking at when it gets to this area, which we talked about here and here, and then in front month, which is the brown, or sorry, it's the VIX, just in brown right over here. It marks sometimes potential short-term, turning points, bottoms. It did right here too, right? Boom, we moved up and so forth, right here, boom, boom, and then moved up a little bit. But also on the flip side, once you get this yellow line to come up and then also vol to settle, sometimes that then marks some turning points to the downside, okay? So that is always a possibility, but as it stands right now, where are we? We are right here in the yellow, and if I look back over, just right over here when vol was coming down, boom, boom, vol is coming down right about there, right? So what happened? Sorry, let me undo that. I'll redraw, boom, boom. So it's about the same area as we saw over here, and what did the market kind of do? Well, the market actually kind of bounced a little bit from those levels, right? So we saw little bounces take place. So all I just want to point out is volatility's coming off. We have the ratio between 3-month vol over VIX kind of pulling up a little bit. It's always a possibility to see a potential bounce from these levels. Okay, so as we're walking into event risk, things are at the lower end of the zones. We got to be careful. The overall chart looks like complete just crud right now. If you just take a look, right? We're outside of the weekly expected move. We're back in this little chop box over here. It's not something that I'm just jumping for joy to go long in, but like I stated on yesterday's video, you don't want to just short here. You want to see what it does. Maybe it puts in a higher low and then it takes it up like that. We talked about that, okay? Q is the same situation. We're at the lower range of this chop box. Remember, this could still very well be a potential inverse head and shoulders where we get some sort of a rally into year end. I'm not going to rule it out, but it's highly likely to if this hawkishness keeps up. And if we get a good jobs report, we're going to take out that low. Okay, so you got to just be tactical, right? When things contract, that's when we can become a little bit more tactical as far as a risk management perspective goes. IWM, you can see the falling wedge broke down. We're below those 5-day moving averages across the board. We got outside of the weekly expected move, and now we're floating right around it. So yeah, like we stated yesterday, if we get outside of it, don't short into it, right? It might do something like that and come back up, or it might flag out like this, and we can potentially break back down into this previous chop box, okay? That's all I got for you on today's episode, everybody. Be careful, okay? Don't get overly confident in this markets, because trust me, the bears that get overly confident will end up losing. Just like the bulls that are overly confident, they ended up losing and now they're crying. Okay, it's a back and forth game, so you got to be tactical, including these bear markets. See you later.